A very good afternoon, everyone, and welcome to the Q1 2022 Investors and Analysts meeting for Renaissance Services, SAOG. This is the opportunity that we have every quarter for our investor and analyst community to question the management of the company. Today, as usual, you have my colleague, the CFO, Vishal Goenka, and myself, Stephen Thomas, the CEO. As you know, we follow a very simple Q&A format for those of you who are regular attenders, and for those of you who are new, welcome to you all. You'll soon get used to that format. So on that note, I open up the floor to whoever would like to ask the first question. Thank you.
Hi,
Hello.
Aisha, you can ask your question, please.
Hello, good afternoon. Thank you very much for hosting this conference call. My question is about the occupancy levels. Have you seen improvement?
Hi, Aisha, if you could just also, talk about your organization.
Okay, sorry. My name is Aisha Zia. I'm the acting head of research at Obar Capital. So my question is about the occupancy levels at the PACs, how they are progressing, especially at Dukem. Are you seeing some projects that are being revived, oil and gas projects, given that oil and gas prices are elevated? So if you could shed some light on that.
Yes, certainly. Thank you, Aisha. So I'll start with the PACs, the Renaissance villages in the oil and gas fields. There we have seen improvement on last year's numbers. We're talking in the chairman's statement was referring to would come up to 90% there. It's around 89 at the moment, so it's fluctuating either side of the 90th percentile. Which is a good level of occupancy for us. I mean, we regard 95 as really full when you take account of movements and etc., shift changes and so on. Looking very positive in the oil and gas fields. Specific to your question, we are seeing movement. We are hearing of more project activity than there has been, of course, during the 2 years of COVID and following the original oil price crash. So more activity is coming back to the oil and gas fields, and we feel that not just in our occupancy numbers of those assets that we own that we've just spoken about, but in where we operate for other clients in their facilities in the oil and gas fields. So we're seeing that general trend of improvement, not quite back to pre-COVID levels, but getting very close to it. In Dukem, our occupancy as at today is 12,755. It has been up around 13,000. It's dropped off a little over the Eid period, and then one smaller contractor demobilization, but there's another mobilization coming in. Essentially what's happening in Dukem with the major project going on is still OQ8, that's Dukem Refinery. And there what we're seeing is if you break the project into 3 component parts, 3 EPC consortia, EPC3 that we're doing the tank farm up at Ras Markaz and the pipelines and so on, is starting to demobilize. EPC1 and EPC2 are starting to bring in their sort of commissioning and finishing teams. The estimates that we have, as we expect our friends from EPC2 to be with us throughout the year, and we expect our friends from EPC1 to be with us into about halfway through next year. What is affecting occupancy away from the project side is we're very happy to have signed a new long-term commitment from one of our anchor tenants. They've been with us from day one. That's Oman Dry Dock. They averaged 2,700 occupancy last year. They're up over 3,000 this year. They have forecasts to go up to 4,500 and 5,000 in the coming year. We're very pleased that they have committed to us in the long term. We have a new 5-year contract with them, with their intent for that to be 5 years that we keep renewing going forward. So occupancy doesn't just come from the projects. There's also, in that case, a stable and growing permanent workforce building up there. Thank you, Aisha. That's the occupancy.
Aisha, if you have any other question, please ask. Otherwise, Samir, please feel free to ask your question.
Thank you, Vishal and Stephen. Actually, yeah, I have a couple of questions. First, on your inflationary pressure. As in the last 2 years, Renaissance were, able to, take the hit on the inflationary pressures, given the fact that the oil and gas industry were on the lower side. So now things have improved on the oil and gas sector. Are you expecting a reciprocal, from your clients by increasing the, so would you be able to pass on these additional costs to your clients going forward, especially in the current scenario where we are seeing the food-related inflationary is really picking up, especially in the last 1 quarter?
So thank you, Samir. I'll answer that in sort of general operational issues and passing on of rates to clients, and then I'll pass on to Vishal for any other financial issues that he wants to add to that. And it's quite a multifaceted answer here, because first of all, there's always inflation. Granted, not on the rapid scale and global impact that is happening in terms of unexpected inflationary pressure. But if you look at the inflationary pressure over time, we have for many, many years, through building volume, through innovating the length of our ethical supply chain, been able to counter inflation in many ways. If you take a very simple case in point, those of you who've been following us for years are aware that the rates we quoted before we even opened Renaissance Village Dukem, our rack rates for the rooms, etc., have not changed. We have managed to get through COVID. Yes, there have been cost pressures and so on in COVID where we absorbed those cost pressures, but there's been inflationary pressure. You look at consumer price index year on year, and there's always an impact on the consumables. So Vishal and I pay real homage to our colleagues who work in our operations and our supply chain and our finance team for the way they work on these issues and make sure that we remain competitive and that our buying power, which grows all the time, really is exercised to its best of its ability. Now that brings us to this year. For example, we saw at the start of this inflationary pressure, it probably had in this first quarter a modest impact of about 100,000 riyals. If we don't act, it could have a significantly higher pressure in the 3 quarters going forward, but we are acting, and we can act in different ways. First of all, we are again this year going through the process of a number of contracts where we were retained, in some cases extended for 6 months, extended for 12 months, etc. Those contracts are again up for renewal. In 90% of cases, we have either been successful in retention or we are looking extremely successful and likely to be successful in those closing out those negotiations. I've just given one example with our friends from Oman Dry Dock have just signed up for 5 years with us, for example. That in those discussions, we are able to do two things. One is that we're able to recalibrate the rates or work with the client on scope changes, or even work with the client on the flexibility of menu changes and menu engineering, as we call it, that can direct the costs to those products that are least affected by inflation. And so that work is ongoing. Now, there are other instances where we are at the moment taking a conscious decision to work on mitigating inflation so that we're not passing on. So at the moment, we have no intention of increasing our rates at Dukem. At the moment, we have no intention of triggering our rightful inflation clause with our client at PDO. We're much more engaged with them in what are the things we can do to make sure this doesn't impact our business and doesn't impact you in terms of quality of service. So it's not an easy period, as Samir, you've hit on a very important question. But what I would say is that I feel that Renaissance, with our client relationships, our record for contract retention, with our excellent ethical supply chain and relationships through multiple suppliers, we have increased our local purchasing to 79% now. So our in-country value is high. That the more we shorten the supply chain, we take out a lot of the logistics cost of import and so on. So we're working, but even with our international suppliers, to get the best possible. We're buying forward. We're perhaps stocking more than we would normally stock. We try and keep inventories down, etc. In this case, we are working on mitigating this, and we are happy with the progress that we're making, both with clients and with our own internal processes. With that, Vishal, is there anything you'd like to specifically say on the financial impact?
Thanks, Steve. So Samir, inflation and these kind of unprecedented situation is a stress test. And if you are really able to handle this stress test very well, because of all the things what Steve mentioned in terms of planning ahead, in terms of managing your excellence, your supply stuff, then you come out as a winner, both in terms of the competition as well as with your customers. And that's exactly what we are seeing here, because we are seeing that customers are even liking you more. And because they are seeing that the entire burden of this inflation is not being passed to them, but how we can mitigate it. That's what Steve mentioned. So in terms of this year impact, yes, there is a pressure both in our Oman and UAE operations, but the kind of the planning what we have done and what we are doing now, the impact will be minimal. So there will be some impact, as we mentioned, that 100,000 riyal in a quarter, and this inflation we are not seeing is going to last forever. There will be ups and downs, and that is the characteristics of inflation. So we are also seeing that some breather will come in during this year in some of the commodities, not in everything. So that's where you really do your menu engineering, and you see that what is economically available, that you start using it with the same nutrition value. So yes, some impact, but manageable. That's what we are seeing. And ultimately we are seeing that as like if this becomes permanent, then this becomes permanent for everyone. Then you basically talk to your stakeholders and then do the right adjustment in the pricing. So yes, there is an impact, but it's manageable. And despite that, we will see that, profitability margins are still maintained. That's how we are seeing the situation for this year.
Yeah, understood. It's very clear indeed. My second question is on, what percentage of your contracts are subject to retender, especially in the contract services?
So there's a significant volume this year. In terms of its total percentage, I'm going to guess, and then Vishal might be able to sort of look at it's something high, around 75% is being recycled this year, because we once again have 100% of our MOH tender, our BP, our Almouge, Dalil and Oxy are already, we're very happy to say, signed up with us again for new contract periods. So we're happy about that. The Royal Guard. And whilst we never take for granted that we will always retain everything, we'll also make some contract gains in some areas as well. But I would say that we are very, we're cautiously optimistic that the vast majority of that is going to stay with us. It's going to stay with us at enhanced prices that reflect, not enhanced prices that change our profitability, but that deal with the inflationary pressures that we've had, which are not just in the consumables. There's been, in the course of some of these contracts, we've seen cost of doing business in country going up for different reasons. And so we've got clients who've understood that. We've got tender processes where we have come out as the low bidder by tight margins. And when it's tight, there's always pressure from competition. But nevertheless, we are ahead as low bidder, and therefore in a good position to win most, if not all, of that business.
Yeah, one follow-up question on that. In the chairman's report, it's mentioned that your current backlog is around 59 or 60 million. How was it in the last year, same period? What was your background, contract backlog?
Vishal, do you recall what we were this time last year?
Sure. So basically, Samir, last year, if you see that there is a combination of extension and renewals. So immediately post-COVID period, many of the clients decided not to really go for renewals, but go for extension. So if I consider extension, that basically we retain 100% of our contracts. But let me give you the exact number of, contracts, how much we had last year. Almost, let's say, by the year end of last year, 2021, we had almost 70 million Riyal contract backlog. Yeah. And our annual revenue is around 55 million Riyal. Yes.
Okay. Thank you so much.
You correctly mentioned that if you see the 75% ballpark, it comes to that this year. And MOH is the one major one. So because a lot of extension happened, otherwise this 75% situation would have come last year. But clients believed in us that we can really manage it. So they extended for 1 year, and now they are coming out for the tendering process. Yes.
Thank you so much. I have some more questions. Maybe I'll come back later.
Thanks, Samir. So now goes to Bishan.
Hello.
Hi, Bishan.
Good afternoon, gentlemen. Thank you for this call. My question is with regards to something mentioned in the chairman's report. It mentions that there is a pipeline, sort of contracts in the pipeline are worth 90 million Riyals, and that they are at various stages of negotiation. If you could just throw some light on those, and then I can probably ask some further questions. Thank you.
So that is referring to those contracts that we've just mentioned. The Ministry of Health tender the BP tender, and so on. So those things which I mustn't speak prematurely, but the Ministry of Health tender, it's in the public domain that we are in lowest bid position. We've been called into the tender board and discussed and explained the changes in our pricing to them. And so we're expecting an outcome very soon on those things. So, we are working on other contracts that are in our sales pipeline that we don't include in that number. Some are short term. I can give an example where we are competing for provision of catering services for the FIFA World Cup in Qatar. And if we were successful, that's something that would have a short term but important impact toward the end of the year, as well as a reputational one in terms of the prestige of doing such a job. But the 90 million is the bread and butter of those cyclical contracts that are coming round this year.
What would be the expected sort of success rate or the conversion rate on these projects, given your track record and experience?
I would say 95%.
Okay, so 95% worth of 90 million riyals is what you expect to convert.
Yes.
And any updates on the PDO Manatil project? I know we've discussed it multiple times, but if you could if there's any update for us at all?
There is a small update. So we all know that the full deboom, as it was called, the design, build, own, operate, and maintain project across the 30,000 beds has been halted as a holistic project. And with that, the very good news for companies like us, where we are the dominant player in the pack market, that the packs are confirmed as part of the accommodation solution for the PDO oil and gas fields through to 2044. Only why there's a cutoff at that point is because that's when the concession period ends. It doesn't mean that they wouldn't have a role after that. So we have another 22 years confirmed for the packs. And the delta, because if you remember, the packs have some 15,000 beds, of which we have some 8,900 of those. And the balance 15,000 beds still require a solution. So Manazil, the Manazil team within PDO have reached out to the tenderers and asked again for expression of interest to re-engage around those 15,000 beds, using what we've put in so far, but then recalibrating it with the changes that come with that. So that process is to be, the response goes in for early June, and the process will start soon after that.
Okay, noted. That's good to hear. Thanks for the update. My last question was with regards to the waste management services space. You mentioned it was a very exciting space that you wanted to be a part of, and the company had started off with a small step in that direction. What are your aspirations for this year and the next year?
Well, if you remember, Bishan, so the government has decided that BIA will take over the waste management and a journey for the whole country as a state-owned enterprise. And the first thing that they've addressed is waste collection. And there was a circuit of 6-7 year tenders for that, and the aggregate total of that whole market is 234 million riyals. And of that, we picked up 8% because we got the last one at Al Wusta and CZAD, and that was a 19.4 million contract win. Now, the since then, we have picked up and been awarded the important role with PDO. So this is with BIA, but to perform services for PDO. And that's slightly more interesting because it makes us, of the private sector doing this, the only ones that said that, yes, it's got the solid waste collection. That's the same as the other 234 million I referred to. But this then also has the clearing of dump sites, dealing with a lot of old waste that's there, removing it. And we've started this project and we've got compactors and a team. We're doing a lot of work with them, also allowing a big piece of that to be with local community contractors and SMEs working with us. And it then also includes the operation and management of the waste sites. So that, which is a 12.2 million real contract of those three component parts, is our sort of new piece of the action. Why is it exciting in the future? Is because ultimately the collection of waste and the sending of it to landfill is not sustainable, and more there will be solutions, as there are some solutions for a circular economy, that, you know, we recycle our cooking oil, we try and do the best we can with our PET bottles and our cardboard and so on, but this really needs a step up in waste treatment and the where waste is sent to, and that will be the next phase of BIA's call to the market. And so our job is to be ready to respond. And whilst we ended up with a small piece of the market, as I've described before, we have to be happy that having broken into the market, because who won the other pieces were all the international players. And whilst we have a very good international partner with us, Saja Environmental Services, we are absolutely joint ventured with them, self-performing those projects. And I'm happy to say that BIA is very happy with us. I mean, of course, I would say that, wouldn't I? Please go and ask our client and check that they're saying the same thing as me. But that's what they tell us. They are genuinely happy with what we're doing. And again, I believe we will be a serious contender as the new opportunities arise. What I can't confirm is when those opportunities, I know that BIA is working on them, and that when they come, they will be like the waste collection volume. But I think maybe late this year or during 2023, we should see some opportunity coming down the track. Thank you.
All right. Thank you so much, gentlemen.
Vikram, you can ask your question.
Hi everyone. So my first question is on RSVD. Okay. So in this current report, it's mentioned like 65% of occupancy still it is there. And so is there any update, like whether this occupancy rate going forward it will improve, and when it will improve? If you can provide any update on this. Okay. So this is my first question. I will ask for one further follow-up question on this RSVD. Okay.
So, Vikram, there are two pieces to this, or three actually, don't know. The first piece is what visibility we see during the year. So, you know, we've averaged about 12,500 so far at the time of the report. We're about 12,775 today. We have visibility, and this can change, it's a volatile thing, but we have visibility that we will average north of 13,000 for the year. Now, so that's the first piece of it. The second piece is that it really could be more. and the chairman refers to that because all the authorities and everyone agree with us, that we were asked to put the International Labour Organization standard in, which is the minimum standard of worker welfare required to attract foreign financiers, foreign investors for massive projects like the refinery and other things at Duqm. And unfortunately, there are still some contractors who are finding ways round their obligation to look after their people in that fashion by keeping them at Renaissance Village Duqm. And so everyone is supportive of us on this, but sometimes if someone is just outside the zone or whatever solution, innovative solution they have for this, it's not a light switch that can be turned on and off. And so what the government is doing is they're conducting a major inspection of all those, so they're commissioning an independent third party and getting reports so that they then have the tools that they need independently assessed to be able to at least shut down the worst of those. And so as these things happen, then we will see those numbers moving in towards us, but we can't factor those in yet, because what has proven the case so far is people have found innovative ways to stay outside the fence from the time that COVID hit is when they started doing this. The good news is the third piece is that the authorities and the major project owners, etc., have learned from this, and as we have, and are really committed to making sure this does not happen again for future projects. That there are no loopholes, that people could find a way that they think is justifiable to look after their people in that fashion. And so I think that's a positive thing going forward. And so that we expect the situation to improve in the future. Quick summary, I think we'll average about 13,000. There is prospect that if this exercise is successful, that could go up by some decent numbers. We estimate there's about 5,000 people living outside the fence in conditions they shouldn't be. Thank you.
Okay, thanks for the detailed explanation. So my next question is on this follow-up question related to RSPD. The 5-year contract with Oman Dry Dock. You mentioned that that more than 3,000 OTC residents are currently in RSPD, and it's expected to rise more than 4,500. So is there any timeline, by which they will be moving to RSPD?
Yes, there's not a specific date. There's a gradual increase happening. There are certain things have to, so for example, I was in Duqm, came back yesterday, there are 28 vessels in there. I remember it was designed for 10 originally, and so they're doing really well. I think we have to commend them, not from our point of view as Renaissance Village Duqm, as Oman. It's important for Oman and for Duqm that is a successful project, and it is. So they've got some new floating docks coming in. They've got their fabrication yard expanding and so on. And those things are scheduled to all happen in the course of this year. And when they do, we'll start to see that moving up. So when I say we expect to see them up at 4,500 to 5,000 in the course of the year, I think over the next 12 months, we will see that happening.
Okay, thank you. Okay, so my last question is on MOH contract, which in last year they have extended for 12 months, if I'm not wrong. So is there any update on this MOH contract?
Well, good memory, Vikram. Exactly 12 months, and your timing couldn't be more perfect, because those 12 months expire at the end of this month. So we are operational. We are fully mobilized there. We are the lowest bidder across the board again. But we have to wait for the final decision of the tender board. We believe the recommendation is to go with the lowest bidder, and I believe we're regarded as the technically competent bidder as well. They're very happy with our services. So the fact is, we're waiting for news of that award, and I leave it to you to work out what might happen in the next 2 weeks. I believe it would be something of the following: either there would be that we should be a serious contender to be awarded that. If for any administrative reason there's any delay, then I think we might be asked to do a short extension while they administer whatever needs to be done now. But that's the situation. So we are, given that scenario of facts that I've presented to you, cautiously optimistic that we may be successful in retaining our Ministry of Health work. Thank you.
Thank you. Thank you.
Vikram, whether you have any further question?
No, I don't have any other. Okay. So thanks.
Thank you so much. So we have, question from Bishan. So.
Hello. Good afternoon, gentlemen. This is Abbas.
Hi, Abbas. Please go ahead.
I had a couple of questions. So if I have to split the Renaissance business into the village business, which is Dukum village and the PDO village, and then if I have to look at the pure contract services, what sort of revenue contribution are you looking at for the pure contract services business to the top line? I think last year you guys made 110 million Omani Riyal in revenue. Is the number close to 45% for the contract services business?
That's right, Abbas.
Okay. So now that I have that confirmation, and I think in the chairman's report in the first quarter, we noticed that, if you guys are successful in most of the tendering, you're looking at an order backlog of 150 odd million. Now, what's the book to bill ratio? What's the sort of, how many years will it take you to extinct this backlog?
This will be our annual revenue from contract services, between 55 to 60 million Riyal, on an average. So you can see this would be around over 2 years, around 2 year kind of the billing. Okay, so your run rate so you expect your run rate for the contract services business to go up as in 22 and 23. Is that a fair conclusion compared to 21? As simple as that, the inflation is going up, correct? Okay. So the point is that, like the same contract value for the same number of meals, the price has gone up. And what Steve mentioned is still, after that, we are the lowest bidder. Because of maintaining the supply chain efficiency and all. So yes, we are expecting at least to bill 55 million Riyal, or more. And in terms of operating profit on the bottom line impact, you feel the numbers will be more or less consistent with 21 as per your expectations? Slightly better, because 2021 is still, we had some COVID. And for example, I'm not saying hand holding, but still we were supporting our clients in a sense. It's not that COVID is done, so suddenly you take out all those supporting things. We were still serving in the packaged meals. So 2022, we are expecting slightly better margins than 2021 in our contract services. Okay. And when it comes to the village business, it's clear. I mean, Steve, and on the call, you've mentioned the challenges with Dukum that's been going on for a year. So as things stand, you've guided to the 13,000 bed, which seems like a reasonable number. And when it comes to the PDO village business, the current occupancy rate is close to 90%. Do you see any upside in that? And I'm going to come to the delta that Steve spoke about when it came to Manazil in its new form. So just on the current business alone, do you see any upside to the 90% occupancy as we speak?
So I think we will have a few more months at this kind of level, either side of 90%. So let's take 90 as the average. And then we believe that we would see more occupancy coming in towards the latter end of the year. And there will also be some issues in the Manazil conversation that may require us to expand or to consider expansion of some of our existing packs. Because we see the occupancy will go beyond the 100% mark at the moment of capacity. So that's the situation.
Right. And just Steve, just to, I mean, because you mentioned there was a small update with Manazil, and I got what you said, but just if I could ask you to give a little more color in what your understanding of the situation is. It's a no-brainer. It's non-negotiable that PDO needs those extra beds,
Yeah.
So it could be in the form of, what you said, deboom, or it could be in, another form, which is more in line with what's happening right now. But this is non-negotiable, that they need those extra beds.
Yes, I think that Abbas, you're spot on. They absolutely need them in two ways. One is, whilst they're for smaller numbers, it's nevertheless a high-level requirement, is the PDO camps themselves. Whilst there are some assets in those camps that can be retained as part of a new footprint, so there's some newer accommodation blocks and so on, but not many. They do need to replace the aged infrastructure of the original PDO camps. So that has to happen. The other thing that they're absolutely committed to happening is that where there are no packs at the moment, there remain what we call tax, temporary accommodation for contractors. Even where there are packs, whilst they're not competing tax, there have been overflow tax, where if a pack is full because two projects come along at the same time, then another tack has been allowed to come up for that, or an old tack be used. Manazil is about shutting all of that down. And that's why we talk about 15,000 beds that have to be rebuilt. And so that is coming. Now, will PDO decide to do that on their own balance sheet and let out the services? Will they decide to do their own camps on their own balance sheet and do the contractor accommodation as extensions to existing packs and new packs on the pack formula? So these are two options that are being considered. Whatever happens, as I've said from the beginning, whatever happens with Manazil, because of the absolute commitment and need to either replace old facilities that are going to end up being unsafe by not replacing them, and replacing the tax, because of that, it is bound to be an opportunity for us that's seeing a doubling of potential growth for us in the oil fields from our current position, if we do what we have a traditional track record of doing, which is winning the maximum awardable, which has been 50% of each pack tender.
Okay, but in terms of timelines, you don't have any clarity, because I mean, this conversation has been going on from their side for at least a few years now.
Absolutely, Abbas. So what's happened was there was suspension of the previous position, and my last update to you is that our information is they're saying no, Manazil's not gone away. We're coming back with a different solution. Now, the bit we're clear on is the role of the packs in that solution. So that's good for us for a start. So the bit that needs clarification, they've literally just put out the request for interest to the same group of tenderers and said, listen, are you prepared to to resubmit along these lines? Now, those lines, so at the moment, that's for the 15,000 beds. Whether those lines are we'll build, you operate, etc., is not clear yet. it may be a combination of those things, and we'll keep you posted as the information comes out.
Okay, thank you for that. Has there been, I mean, okay, there was speculation. You guys never went ahead and said anything about this, but there was some speculation of a shifting of a UK military base from Canada to Oman. Has there been any update on that? I mean, have you heard anything? Are you talking to them to build something out, or you can't comment on that right now?
Interesting. Well, I'm delighted to know what you've heard, Abbas. We'll have to talk offline. No, the reality is, let's take what's in the public domain. The British Defence Secretary, Ben Wallace, came to Duqm and announced that this is their intention, is to move the Canada operation to Duqm. Now, that, of course, then needs I's dotting and T's crossing to become a permanent reality. So what I can tell you is that, and so let me tell you what that means, that the exercise that was carried out in Canada would be 2 exercises requiring accommodation for about 800 to 900 people for 2 sets of 4 months. So 8 months worth of exercises with that kind of volume of people. So what I can tell you is that that is coming this year. If we take it a year from between now and a year from now, and the following 2 years. And that this year they are committed, they're coming to stay with us. And they see that as the solution for the next 2 years. So effectively, it requires our flexibility, because that's sort of 66% occupancy of that requirement. Although when they are here with us, it does result in a lot of other spend. There's a lot of other services and things that we're able to do, just as when the Navy ships come in, we're part of their solution, any sort of services that are needed from the ground while they're in the port. So this is good news for us, that the British military are definitely part of our forecast for this year and into next year. The long-term issue, what I understand, and this is now I'm going out of the public domain, is that intention to bring that here permanently is now under serious discussion between the Omani Ministry of Defence and the British Ministry of Defence. So they're already committed to 3 years, making that permanent, and then on a larger scale. Because what I must say is that these 2 exercises a year, 2 times 4 months, 900 people, are on top of existing exercises planned. So the next Safe Syria is still to go ahead as planned, and of course that we get much higher numbers and so on. So the British military presence is going to be substantial for us, and an important part of what we do. And it's a very good thing, you know, like the Brits sent round a big fire safety team and other safeties, doing about 14 people, experts, combed our facility for nearly a week, etc. And their standards have gone up, and have sadly in the post-Grenfell world, necessarily so. And we've passed with flying colors, and they say, you know, your facility is better than many of our own facilities back in the UK, in our barracks there and so on. So we've got a great relationship. They love staying with us. We are part of the solution for Oman to be a more cost-effective training ground than elsewhere in the world. And I think that's the sticking point will need to be sorted out in the negotiations between the 2 governments, that those negotiations keep it that way. Not just the accommodation that is part of it, of making it the cheapest. Because what I understand strategically, it is a fantastic, because of proximity to the sea, the ability to have naval and land, amphibious landings, etc. Not just for the UK military. If this goes ahead, then the other friendly forces, US, India, others, are all standing by expressing great interest of using the same space. So that's what I can tell you about it, Abbas. You
I
probably know
appreciate
more
that.
than me.
No, thank you for that. I'm just wondering, my only question is Renaissance the only serious player that the UK military would consider, or are there competitors in Dukum who could provide a similar service?
Yes, that there is nothing else available right now. The alternative is to set up their own accommodation. And the other alternative is to do temporary solutions. Before we built our pack, we did a tented solution for the US Marine Corps. We've done porter cabin temporary solutions for the UK military at MAM and Shafa during the last Save Syria. So it wasn't just in Dukum that we were serving them. And so there are alternatives. None of them is as good a quality of service because it's a permanent building and the nature of our facilities, and none of them can compete with it. When we provided those temporary facilities and removed them at the end of the exercise, cost those clients far more than it costs for them to stay and happily, profitably for us, because it's a win-win contract, as it should be, with us in Renaissance Village Dukum. So there are alternatives, but I don't see competitive alternatives at the moment.
Thank you. I appreciate that. Thank you. That's very clear. My last question is for Vishal. I mean, Steve, you can jump in as well. I remember when Renaissance, sold Topaz, and you guys went ahead and did a restructuring of capital. There was a commitment that the company is going to become a consistent dividend player, who whatever money is available after capex needs is going to go back to shareholders. Now, in light of that, in light of that sort of commitment from Renaissance in the past, how do you see dividends in this year, next year? And especially after you relate it to your capex and refinancing needs, Vishal, are you still looking at paying out 100% dividends post any necessary capex, or are you going to save some money to try and get into new businesses?
So basically, like as we had committed at that time, we have been following that. Yeah, immediately after sale of Topaz, we have been paying dividend. Despite COVID, any ups and downs, we have been paying the same dividend. Now, Dukum occupancy goes up and, situation further improves, which we are expecting, then of course, dividend goes up. But based on the current business, we are expecting to maintain the same dividend at least for this year and next year. And of course, we are always looking at all those opportunities in ESG, in our line of business, as we have put in Renaissance 2.0 as well, that something backward and forward integration relating to our business, we are always keep looking at it. Yeah. So if anything comes around, considering our leverage ratio, considering our balance sheet, considering the headroom available to borrow or equity, I think a dividend will still be paid out in addition to capital commitments to projects like Manazil, if Manazil happens or similar projects.
And what's your guidance on capex for this year, Vishal?
So if Manazil happens, then of course, you will start building up over a 2-year period, 3-year, 2.5 period. Otherwise, the capex is primarily going into our this contract renewals, and primarily this waste management contract with BIA, but not a significant number. It could be, not more than $1 million real.
Oh, wow. Okay. Got it. Thank you, gentlemen. Thank you. It's always a pleasure interacting with you both. All the best, and look forward to chatting with you soon.
Thank you, Abbas.
Thanks, Abbas. Is there another question lined up, Vishal? Otherwise, I will expand on that. Right, let Samir come back. Sorry.
Yeah, Samir has a question and Joyce has a question.
Sure. Just one clarification. So you mentioned that the Manazil project, the previous tender has cancelled, and they are re-tendering it. That's the gist of it, right?
Actually, that's not the wording they would use. I mean, I think you could use it. You could look at it that way, Samir. But they are not awarding the full amount on the basis that it was bid, which was it had greenfield and brownfield options, and it's greenfield with all new and brownfield including packs and so on. That is not going to be awarded in that way, where they would be awarding to successful bidders with an occupancy guarantee that was creating a major contingent liability on their own balance sheets because of the longevity of the project up to 2044. And so that's what's being rethought. And that's why I'm saying that they may be looking at this in terms of self-investing on some of it, because if it's going to be on their balance sheet, they can have it on their balance sheet at cost that they're in control of, and so on. And so there'll be an element of their building, an element of the contractor building, an element of, and the rest as pure services. So they don't regard it as cancelled. What they do regard it is as that's not being awarded that way. The project isn't cancelled. They're coming back to the same group of bidders to see where they can leverage off what's been quoted and get recalibrated rates, if you like, around any changes, because there's bound to be change in that when you're moving to the 15,000 numbers. So it's not as simple as cancelled, it's changed, I would say. One of the things that we'll be seeing larger capex on in next year, partly to follow on from Vishal, will be maybe some reinvestment in our existing packs and expansion of those, and etc. But that will come. We can't talk about that yet until we see the full Manazil rollout. But that is certainly being talked about as part of the solution. So why I'm being careful is they don't regard Manazil as cancelled. They regard Manazil as changed.
Got you. One more question from my side. So could you give some color on your UAE business, where it stands?
Sure, Samir. So when we had acquired this business, we had 200 people, and now today we have over 500 people. And basically, the way it looks like that we should be crossing over 7 to 8 million riyal of annual turnover, despite inflationary pressure. And the new market generally takes 6 to 7 years to become profitable. We feel that we should be we should be avoiding losses this year. And then, of course, based on that, we will continue to build on. So UAE looks okay. The revenue is growing. Revenue has grown compared to the last year. So as I mentioned, that's 7 to 8 million riyal kind of the turnover we are looking at it. And if inflation things are okay, a little breather, I think we should be positive on UAE bottom line.
Could you again come on the revenue you are expecting this year?
7 to 8 million riyal.
7 to 8 million riyal. Thank you so much, Vishal.
So we have a question from Joyce.
Thank you, gentlemen, for the call. Just a quick follow-up on this MOH contract. We had done all the MOH tendering process, gone through the tendering process last year. So is it a new tendering process which we are working on, or is it on the same bids which we did last year and we are still negotiating on that?
So Joyce, it's the same bid. It's the May 2021, so exactly a year ago bid that went in. So that was extended because the time had run out at that point, and they felt they'd need 12 months to do that. As I remember Vishal briefing you at the time, that we had got an uplift, negotiated an uplift for that to reflect the changes in cost. And I know we'd really absorbed a lot of cost in COVID, etc., during that period. And so our client was understanding of that, and we agreed an extension with a percentage uplift. This new tender is that tender that was put in then. and that is the basis that it will be awarded on. Now, of course, tender board tenders are a matter in the public domain, and so it is very easy to see that we are in the low bidder position across the board, and we just have to wait and see. There have been a lot of negotiations because it is tough. I do understand it is tough for government clients. Ideally want a price freeze, or they ideally want prices to go down, and the reality is that times have changed, and everyone, so it's proven by the other bidders as well, because their prices have gone above ours. And so we are hopeful of getting it awarded on that basis of the bid we put in a year ago. That is what is on the table, and has been thoroughly discussed with both the ministry, who are happy with it, and the tender board, who we're waiting on the final decision.
Thank you. That's it. And good luck. It's always been a pleasure speaking to you.
Thank you, Joyce. We are almost, we are at the end of the session, Steve.
So once again, thank you very much, everyone. We always enjoy this time we spend with you, and you never let us down with your variety of questions, the odd googly and that comes in, which is always fun. And we look forward to seeing you again next quarter, when we'll be talking about our half-year results. Thank you very much for your continued interest in Renaissance, and have a very good rest of the day. Thank you.
Thank you very much.